Good morning friends, welcome to Sharekhan pre-market view. Indian markets continue to grind lower amid weak global cues as well as lower sentiment. Markets yesterday closed at 2015 lows with Sensex taking over 250 points cut and Nifty taking a 70 points cut. There was broad-based selling across the sectors and the overall breadth was also quite bad. So overall net markets continued to be weak. Heavyweights like Reliance, Sun Pharma dragged the overall indices down. If you look at the cues from overseas market, they aren't good. US market also yesterday hit 2015 lows. This was after reports and issues coming back to the fore, like Greece issue has still continued to hit a roadblock, and a good set of data which came in on Friday, jobs data, again had speculation on the street that the Fed could lift off in September. The overall Dow index ended down by 82 points, Nasdaq was down by about 46 points and S&P was down by about 13 points. Most of the Asian markets early in the trade today are trading down. Even SGX is indicating a 24 points cut in the early morning trade. If you look at the flows from FIIs, they were weak yesterday. They were sellers to the tune of 750 crore in the cash market. They were seller of 200 crores on the index futures, whereas TII supported the Indian market with cash inflow of about 530 crores. Now after a gap down opening, how Nifty is likely to react? Let's have a view from our derivatives team.
Good morning friends, let's have a view on derivatives. Extending their southward journey for the fifth trading session, the Indian benchmark indices ended the yesterday's trade with a loss of close to 1%. As we have seen that sentiments remained negative since start of the beginning of the trade, and due to heavy selling was witnessed in many of the blue chip counters across the sectoral indices, due to which Nifty ended the session at 8044 levels with a loss of 0.86%. In this period, we have seen that marginal short positions were built up by market participants as open interest is increased by 0.5% from 1 crore 71 lakhs to 1 crore 72 lakhs. Approximately 86,000 shares were added in Nifty futures, and Nifty futures price decreased significantly by approximately 70 rupees from 8114 to 8044 odd levels. Nifty cost of carry came into a positive. It is increased by 113% from minus 0.10 to 0.01%. Also, Nifty futures premium came into a close into a premium of 0.5 paisa. On the options front, PCR is decreased significantly by 3% from 0.90 to 0.87, this clearly indicating a negative sign for the market going ahead. And we have seen that call option has seen good build-up than put option, due to which PCR has come down from 0.90 to 0.87. India VIX was up by 4.42% and finally settled at 18.89%. In the options activity, we have seen that huge build-up was seen in 8,100 call option, which has added 43% shares in open interest, followed by 8,200 put option, which has added 25% shares in open interest, and 8,300 call option also, which has added approximately 16% shares in open interest. Due to highest build-up was seen in 8,100 call option, market was unable to cross the level of 8,100, and we have seen that Nifty has made a high of at around 8090. From there, it has fallen significantly. On the put option side, we have seen that 8,000 put option, which has highest number of shares in open interest, it has seen huge unwinding in yesterday's trade. It has reduced 5% shares in open interest in yesterday's trade. Also, we have seen that 7,900, 7,800 put option has added 2% and 15% shares respectively. Overall, looking at the options activity, we have seen that people have shifted their positions from higher strike price to lower strike price. It is a negative sign for the market going ahead, and if we continue seeing huge unwinding in 8,000 put option, market may go down further. So this would be an important level to watch for. 8,000 put option, we have to continuously watch whether it is whether we are seeing more unwinding or not in today's trade. On ban period front, there are two securities in ban period today. One is MTech Corpus in the same day, and yesterday FIs were net buyers of 470 odd crores in future and option segment, but they were net sellers of 199.60 crore index futures. We have seen FIs have unwinding their long positions of approximately 3% in yesterday's trade. They were net buyers of 349 crore index options, they were net buyers of 364 crores in stock futures, and they were net sellers of 44.75 crores in on stock options. Our 5-day CWAP stands at 8130, high range would be 8150 and lower range would be 7998, which is our monthly strategic break-even point on higher side. Lower side. Currently, Singapore Nifty is down by 16.15 points, which is at 8028. We may see a marginal flattish to negative start in Nifty futures today. That's it from derivatives. Thank you.
Friends, let's look at trading ideas for the day. The first one being IOC. Now, IOC is looking to invest close to 15,000 crore to raise the Panipat refinery capacity. This is sentimentally positive news for IOC, and one can long IOC with stop loss of 343 for potential upside of 363 and above that at 367. Now, our next idea is HDFC Bank. Now, HDFC Limited, yesterday the board of directors have approved a fundraising of 5,000 crore. This would happen through NCD and warrants. This money will be utilized to fund its own growth expansion as well as to increase stake in HDFC Bank. This is positive for HDFC Bank and one can long it with stop loss of 987 for potential upside of 1020 and above that at 1032. Vedanta is our third idea. Now, Vedanta is believed to be in final talks to announce a merger of its subsidiary Kane India with itself. This move will give Vedanta access to Kane's cash and help the company reduce debt. The two companies are shortly expected to inform shareholders about the proposed transaction. One can long Vedanta on this news with stop loss of 174 for potential upside of 182 and above that at 184. Moving on to the news update. Now, Chennai Petroleum has sought shareholders' approval to increase its borrowing limit to 8,000 crore and is also looking to mop up amount of close to 3,000 crore by issue via bonds. There is a recruitment scam which has got unearthed at the Uranium Corporation. Now, anti-graft officials have recommended an inquiry by CBI and Atomic Energy Department. Banks are likely to get more freedom to take 51% stake in defaulting firms. Now, the move amid a rise in the overall slippages from restructured assets is aimed at resolving the stress in the overall banking system. As per media reports, lower fuel prices have helped domestic carriers to trim their combined losses by an estimated about 30% to $1.21 to $1.27 billion in the financial year 2015. Also, friends, Indigo has reported an estimated profit of 150 to 175 million during this period, according to an overall report. Now, FSSAI is seeking to test GSK ITC's fast food brand and has ordered various tests of various noodles, pastas and macaronis brand, including Top Raymond's, Foodies and YY. Now, as of now, no reports have come in, so this is neutral news. However, in case there is a certain ambiguity which is found in the product, then it could be negative for these companies. Skipper has entered into a tie-up with a Japanese company and an European firm to manufacture and sell high-end PVC pipes in the eastern region. And Unitech, as per a new order, has to pay a penalty of 12% simple interest per annum for the delay in its Vistas project in Gurgaon. This is again a negative news for Unitech. Moving on to watch list that we've created for the day. Stock with positive bias we have Glenmark, Crompton Greaves and DLF. Whereas stock with negative bias we have IndusInd Bank. And stocks which we like from long-term investment point of view, we have Aditya Birla Nuvo, HDFC Bank, L&T, Persistent System and Tata Motor TBR. That's all we have in today's session. Thank you.